an icebreaker. So everybody wants to share what is your hobby, where do you spend your time, where founders can accidentally meet you in your everyday life.
Accidentally meet me.
Yeah.
I guess during a flight from somewhere to another destination. So my second home is more or less airports all over the world. For sports, I mean, snowboarding, I guess I'm a little bit too old. Meanwhile, I've been doing this for some time. But I have a pilot license. I have my own boat. I'm a passionate hunter, so okay, I hope they don't try to meet me during hunting. This might be a big accident. But otherwise, I mean, just reach out, ping me, and we can manage something.
Okay, amazing. Who else wants to share their life outside of business?
So I think it's a great question, frankly, and I've never heard anyone ask it quite that way. I have a diverse set of hobbies that I like to do, but what I can tell you, for example, Tim Cook, the chairman CEO of Apple, he walks the Stanford Dish every Saturday at 8 a.m. and I've never seen him personally, but I have had friends that have seen him. I think there's a lot of social settings that are good to meet people, but frankly, I'd rather be in the mindset, and so just make an appointment with me. Go to my LinkedIn, send me a note, and we'll make time, and we'll either grab coffee or we'll do even virtual, whatever works best for them. But I think it's a great question. So I'd like to know anybody that is successful pulling that off.
Okay, where else our other investors, where founders can find you in real life? What are your hobbies? Where do you spend your free time? I remember where you last had somebody accidentally pitch you. What was that place? David, Stephan, Carl Jones, who wants to?
Sure, I'll go. Why not? This is David Mandel. I'm in the Los Angeles area. I do ski every winter. Our family does at least one, usually two ski trips every winter, somewhere usually in the Colorado mountains. And it's not uncommon, on a lift or somewhere in the slopes to have a conversation about what you do when you're not skiing. And so not too surprisingly, there's often tech founders around there, so it's you do serendipitously bump into people who might want to follow up later, but it's obviously not the ideal place to go hunting for investors. And when I'm in LA, I play tennis 4 or 5 times a week. I'm going to play this evening a doubles match, and while it's usually of people I already know, tennis clubs are as another place to bump into fellow investors and potential LPs and startup founders. So any social setting, really, you'll meet
anybody
other
playing
people.
golf? Maybe golf. I know it's getting more and more popular in the investment.
Golf, pickleball. I don't play golf or pickleball at the moment, but I know a lot of people in our industry who do.
I'm happy nobody went to Burning Man Festival from this group. It would be hard to get the phone reception there. Okay, any thoughts, Stephen, Carl?
Yes. So hobby-wise, it's boating, and typically it's on a small boat or nothing that you can get on without an invite. So that'd be hard to kind of do an intersection. But maybe another way to phrase the question is, where are some of the interesting places I've been pitched? While getting a haircut, while getting an Uber ride. Right, Uber rides are big, or sitting next to someone on a plane, like I think Jay, you said that too, right? So it's but it all starts with building rapport first versus let me tell you about this company I have.
I know in Bay Area, every Uber driver has a startup, so it is not accidental. I know in LA, everybody wants to be a superstar. So even at the hotel reception, they want to impress you with their acting skills, just in case if you're a producer or something. So entrepreneurs get really creative. But yeah, hairdressers is something I never heard before. Awesome, thank you. Oh, we have John Stewart joining us. John, the question, ice-breaking question is I ask investors, where do you guys spend your free time? What are some of your hobbies? Where founders can meet you in real life, offline, accidentally? And where is the most unusual place you were pitched at in your angel investing career?
Yeah, so I always like people to just aim direct. So I love a lot of things. I love working out. I love reading. I love hanging out with my family. But when I'm doing something in my spare time, I'm not in, investor or company mode then. And so if somebody asked me, I would probably say, send me something and we can follow up from there. The Back when I was an entrepreneur, the most unusual place that I met somebody was on an airplane, and I had no idea who the other person was. We talked the whole way. He was an entrepreneur too, and we became friends. We shared a cab back from the airport back before there was Uber, kept in touch, and I ended up funding two of his startups and helping on another one. The guy's name was Charlie Marshall, really good man. If I so trains, since I'm on the East Coast, the Amtrak is a place where I bump into entrepreneurs all the time, and if I hear them talking on the telephone, usually around the deadline sales deal, so go over and just say hi. And my job, and I think with most investors, is to very quickly figure out if what you're doing is something that has interest to me. It doesn't mean it won't be interesting to lots of other people, but my job is to very quickly, in 5 minutes or less, or an email with an attachment or less, be able to say, gee, let's sit down and spend half an hour together, or sorry, this is just not what interests me right now. So that's I guess my best piece of advice on this is work your connections. So for me, the very best thing is when somebody I know in my network says, John, you really should look at what Jay is doing. It's really cool. Here's the elevator pitch. He tells me in person, on the phone, in an email, and introduces me to you. And that's the thing I'm going to respond to first. So I get thousands of unsolicited proposals a year.
Hey, John, sorry to interrupt. It was just an icebreaker question. You will have
I'm sorry.
your
go ahead.
segment where you will share all, because I thought like you might share all your secrets just in the hello.
Oh, yeah. No, that's good.
Keep the most interesting part for the end. By the way, the order of the speakers I will be announcing right now. I think John Stewart, you will be at the end because I put you guys according to the order.
Oh, if you could put me up, I'll be in a car in 45 minutes.
Oh yeah, you might go up to 1.5 2 hours, but it's okay.
Can you move me up in the order, I guess is what I'm asking.
We will. Yeah, I will do my best. So for now, we have. I'm sorry, we forgot to ask the ice-breaking question of Carl Jones. Please let us know what are the accidental places you can be pitched by founders. Are you open when founders approach you in the wilderness? What are some of your hobbies?
Well, I mean, when I was living in Silicon Valley, I mean, you can find me everywhere because I was down from San Francisco Bay all the way down to San Jose. So I was up and down the entire area there. And so what for me is I'm big into health and fitness. So, my investment thesis is more into longevity. So with that said, I played all types of sports growing up, from tennis, football, soccer, literally name them all. And then for now, as I'm at my age now, I just go to the gym and then I do outside activity. I think instead of tennis, I kind of lean more pickleball, and I tried it and I really liked it. And I can see why the sport has it's just grown so much, and so many celebrities have invested in pickleball. And as a hobby, I love history. So I mean, history of the world, history of a certain country, or just various, and especially history of venture capital. I wrote a paper on the history of venture capital, of how, for example, how Sequoia started, and how Don Valentine started, and because him and I he started in the same area I did in technical sales, and so I was in that in the 90s, but he was in that, I think, in the 70s, 80s, and then I think you may know, some people, your audience member may know the history of him and Sequoia, but I love studying history. And so when it comes to investing into startup, I love to understand the wave of venture capital, the wave of innovation and technology, because that kind of guide me to what is the right opportunity, because it's about product market fit, and that all leans into innovation wave. And so, I can share more later as we go on.
Amazing. Thank you so much for sharing your insights. I don't see if we have Emilio Escartin in the room. Emilio, are you here? Maybe he will be joining later, but anyways, if you're here, just raise your hand, I guess. So it's getting crowded in this room. At some point I might have to lock it. So all the participants in the room, just housekeeping notice, please keep your mics and your cameras off, so it's not distracting for me, and we can all see speakers on the screen. And you can type your questions in the chat. Investors are welcome to take the questions during the session as you wait for your turn to speak and engage with our audience. And you will, participants, you will have your turn to speak when it is our next Startup Investor Pitch Lunch. So, okay, great. Welcome all dear participants. Thank you for joining our special Angel Investor webinar from Mission to Mars Academy. I am Tanya Mitchell. I'm the founder and CEO of Mission to Mars Academy. We help global entrepreneurs scale their innovative startup products and services to US market and also globally. And we connect entrepreneurs from all over the world with top investors from Silicon Valley and all across the United States. We also help US investors discover most talented startups from new emerging markets, discover investment opportunities in emerging startup ecosystems around the world, like Middle East, Southeast Asia, India, Latin America, Europe. I'm also a host of Startup Investor Pitch Lunch, a virtual event where most disruptive startups have a chance to pitch a panel of prominent Silicon Valley investors and present their innovation, get useful feedback from investors, and get funded. Our global audiences today are over 15,000 innovators from over 60 countries from around the world. So if you want to explore new opportunities for your business in America with us and build your American dream, come join our global family. So today we decided to do something very special, a reversed pitch session. For the first time, we will have investors pitching founders with their top insights and advice on how to do startup fundraising right. So today we are opening the black box of early stage investing for you guys and taking you behind the curtain of the investment world, where you can get unique firsthand insights from our bright panel of angel investors and VCs. This is a really exciting format. I know many of you were looking forward to it, and you submitted many tough questions to our investors that today I will be asking on your behalf those questions from our esteemed investor panel. And those questions are coming from our real founders. I didn't even have to use ChatGPT to source questions. It is all original human community generated content. Today, we will meet 7 rockstar angel investors and VCs, and you will have a chance to hear their insider perspective on how they make investment decisions, what they like and what they don't like about startups and startup pitches, what kind of startups they invest in. And who knows, maybe today you will hear a brilliant piece of advice that will change all your life and make a difference between success and failure of your startup. And I know this from my personal experience that a good advice can be more than just words, because just like that, 15 years ago, I've listened to an advice of a good colleague of mine when I was applying to a Fulbright fellowship in the United States, an exchange program for visiting scholars. And that advice really changed my life. That's what brought me to America. And it's been 15 years ever since of this exciting journey. So be ready to expand your mind today, take notes, and learn from the Angel Investor Lightning Talk. Our format is simple. We will have our investors each give a short 10-15 minute lightning talk and share their experience. Then I will be asking questions that we prior collected from you guys. And you can type your questions in the chat, as investors might, if they like some really cool question, we might take it to the stage. You're welcome to also answer the questions in the chat room, as I mentioned. So I never thought today's startups in the audience will not have a chance to pitch their startup. You still have a chance to come join our Startup Investor Pitch Launch this September. Registration is still open, but it is closing in just a couple of days. So make sure you don't miss out on this opportunity to pitch Silicon Valley investors live from any corner of the globe. So without further ado, I will bring to the stage our first speaker, bright and insightful angel investor, Todd Yansi. Todd Yansi is a Silicon Valley angel investor and strategic advisor investing in AI, banking, cloud platform, cybersecurity, fintech, payments, and SaaS technology. And Todd, we're all excited to hear what you have to share with us. And I prepared questions from the founders for you after your talk.
Great. Let me make a suggestion, since John is short on time. How about I swap with John and let him go?
Oh, wow. That is
okay,
very
John?
generous. Thank you. John, are you up for this? You already
That would be
started the keynote.
that would be terrific. Thank you so much.
However,
Appreciate
John,
that.
you're now my new best friend. And that,
now you
that
all
always means
investment
that,
deal.
that I'm going to ask a favor
Nothing,
at some point.
yeah, nothing makes me happier than to, to make my friends or the partners rich. I've had a lot of that. It's I went to one of my founders wedding, and we'd gone public, and he did really well, and so we were on a yacht dancing as he got married. It was really fun. Anyway, that's one of the joys of this business. So I've been a startup guy for myself with a series of companies, and then I was a VC for a long time too, and the quasi retired from that, and now I've got my little family office that I manage my family's stuff, or my stuff, I guess, that I'm giving to my family and charity. So here are the things that I would say on the front line of how do you get money, right? So the most entrepreneurs that I talk to that are at the early stage, the problem is, how do I get the money? And so thought one is, remember, we're all just people too, and people are really different. So there's fundamentally nothing different about me than when I was an entrepreneur and didn't have 2 nickels that I could rub together in my pocket, and where I am now, where I'm an investor with, lots of luck and lots of stuff. Never discount the role of luck. So thought one, treat people like people. Remember that relationships take a time to build, and it'll be often that I'll see something that I think is terrific, and I'll invest in it right away from somebody who's a stranger. But often it builds. That I look at it and I say, this doesn't fit what I'm looking for right now. And the entrepreneur stays in touch, and they send me a monthly or quarterly update on the company, and things are going well, and I'm impressed by that. So as simple as get a meeting, and keep following up and keep communicating. And I have an investment where for a year somebody did that, and after a year I was his first investor. Just because he was scrappy and indefatigable and a nice guy. He's a friend. So my number one rule in investing is don't do business with assholes or jerks, however you want to frame it. Life is too short. I don't need that in my life anymore. I want to, at least admire. I don't have to like, but at least admire the entrepreneurial team that I'm working with. The thought two is, and I'll get to how to make first contact. That's not hard. If you go to people who want to make investments in, small companies that will be the next NVIDIA. You'll get a meeting if you're prepared enough. So start with a preparation. You need to put together a good teaser or summary of the business, whether it's a 1-page or 2-page executive summary or teaser, whether it's a short deck of 10 slides. And then you start reaching out. But you want to have those materials prepared. So you want to have your whole pitch prepared. You want to have thought through carefully your business model so that you can put together some projections which say, how much do I need to get big? That's really the point. And if you get past a first couple interactions with me, I look at that, and how realistic it is. How much work have you put into it? Because it's a lot of work. If you're trying to figure out very speculative revenues and cash flows over the next 4 years in the future, the future has this funny way of being very hard to predict. But you have to give it your best try. Be armed, be ready, have a good pitch, 15 slides, maybe 20 backup slides. The best way to answer a question is you have a slide prepared to say, yeah, let me show you what my sales channels are. Yeah, let me show you how I'm planning to grow my engineering team. And the org chart comes up. Or let me show you what I think are potential additional revenue streams that we can ignite down the road if we're successful in the path we're forging first. And up comes the slide of ancillary revenue streams. Practice that pitch. Practice it in front of the mirror. Practice it in a 10-minute version, a 20-minute version, and a 30-minute version. Don't make your pitch longer than 30 minutes because it's the dialogue that follows that's really important. Once you have your materials together, and go to all of the VC task force, the Keiretsu forums, all the places where you can pitch for free. Keiretsu forum you can't pitch for free, but there in Silicon Valley there are a dozen of them that are good that allow you to get in front of an audience and pitch, and then practice pitching with your friends and other people on the team. They make sure everybody on the team is on the same page, right? I shouldn't ask your CTO a question about the path of development that you're on and get an answer that's different from the CEO's. That's not good. So get your deck together, get your pitch together, get your materials together, shorten it to any format, because you'll see pitches where they'll give you 3 to 7 minutes, or pitches where they'll give you 10 minutes. If I have an hour meeting with you, I want you to stop talking after 30 minutes and us to have conversation and questions after that. That's my preferred way of doing things. When I say work your network, so next you have all your materials together. What goes to the top of my stack is my friend Sam Coates that I've done business with for 20 years and has helped me in number of companies. He's an attorney, also quasi-retired because he, like me, was very lucky and had some big hits. He was the general counsel for doesn't matter, a company that's a multi-billion-dollar company now. And Sam says, wow, I stumbled across Josh. Josh and Tanya have this really great new company that I think is interesting. Take a look at it. And I'm going to follow up on that email right away, or that message, however you get it, that text or whatever. So a lot of people, especially if you're not in the Bay Area, don't have connections to networks which intersect with mine. But I'm on LinkedIn, and you can see all the people I'm connected to, and a lot of them are just people who just ask me to connect, and I 90% of the time say yes. So they may not really know me. But you can work yourself to somebody in my network. The fast button is your first investor or your lawyers, usually your attorneys, who set the company up. They will have a whole bunch of VCs and investors that they know, and they'll make introductions for you. And again, I'm viewing the attorneys as being they think that this company is significant enough to get funded, and therefore future legal bills will be paid. And if Matt Hemington tells me this is interesting, take a look at it. As a courtesy to Matt, I'll spend an hour with whatever he throws at me, because he's my friend. And they do a lot. I have, I don't know, 6, 7 different law firms that I do work with consistently in the Valley. It's the Cooley Perkins, the Bridget Hansons, and the Wilson Soncinis, and the Cooley Goddards of the world, Perkin Cooley, So if somebody from that firm who's done work with me asks me to look at a startup, I do. And then the third part is listen when you have that. The goal of your first interactions when you're prepared is to get that hour meeting. And that hour meeting, the 90 plus 95% of the time, I'm going to say very politely at the end, this is not what I'm looking for right now. Doesn't mean I'm not looking for it forever. And I'll try to be very specific on why if you ask me. And that goes the gamut from, I think this is too hard. So if you say you're going to compete in an area of AI, which can easily be gobbled up by the Google Meta, the OpenAI or somebody else, I'll tell you that's why. I'm afraid that you'll spend a lot of money finding a nice niche in the LLM, the ecosystem, and that will immediately be gobbled up by one of the big guys. So that's the type of project. As much as I love the project and I love the entrepreneurs, I wouldn't invest with it out of that fear. And so I'll try to tell you if you ask me. And that's why I say listen. So often I'll have an hour meeting where 53 minutes are taken up by the entrepreneur talking and 7 minutes are taken up by me mostly asking questions. And I prefer that balance to be more like 70-30, and that you ask me some questions of given what I've told you, John, what do you think I should do in building my first group of investors? Or do you see any holes in my business plan? Or what are the things that you would be worried about when you see this business? And that's worth gold for you, because most investors are older, and they've just been a lot of roadshows. I've been on over 50 boards. I've been invested out of my VC funds for me personally, and over 150 companies. I'm an LP in a number of venture funds as well. Not only is it me, but if I like it, it fits the thesis of one of my venture funds. I'll tell one. I'm a substantial LP in 1031, which does only the Bitcoin economy. So you may have the coolest AI thing ever. You may have the coolest altcoin, or the US dollar pegged the coin, so a peg coin. They're not interested. It's got to be Bitcoin. That's what they do. They're good at it, and they are making hay right now. And I think I'm going to pass the baton now. You can find me in LinkedIn. I'll put my email in the chat. Anybody on the call is welcome to reach out to me. Thanks to the forum, Tanya. I hope that was helpful.
Thank you, John. Really impressive. Wow, that was just concentrated wisdom from our angel investor, John Stewart. And don't be hurried to leave us yet, because I've prepared, as I mentioned, founders crowdsourced many questions, and I randomly distributed them between investors. And I will be now giving you like really lightning questions, 30 seconds per answer, just really quickly. Otherwise, it will take forever for us to go through all the questions. But I have some questions, and if you can answer them in just one sentence, that would be great. Okay, let's go.
Sure.
What is your investment focus, and what check sizes do you normally write to seed stage companies?
It's like the difference between hardcore and softcore pornography. I know it when I see it. Early stage.
Okay, focus. You mentioned Bitcoin. Also, founders asked if you invest in crypto, in cannabis, in real estate, etc.
Yes. I started a real estate company 40 years ago and still have it. I'm a generalist. I spent 6 years in a biotech firm and did all biotech stuff. I spent another 10 years at a venture capital firm that I funded. We were diversified. I was the silo of healthcare meets technology. I started in internet payments and loyalty marketing. So I look at everything. Half
Okay,
team,
great.
half project.
And from that, the next question: what was your most successful investment so far, and what made it work?
Natera, stock ticker NTRA. I led the Series A. along with Sequoia Capital, Roelof Botha, that was at less than a 10 million pre. The company is, a multi-billion-dollar company now with a $23 billion market cap, I think.
Amazing.
And the people made it great. So you had just an amazing founder, an amazing founding team, and they hired smart and they hired great. As investors, we're just on the sidelines as assistant coaches.
Okay. What do you look for in a founding team?
Passion, intelligence, and the willingness to admit mistakes.
Mm-hmm. And my next question, what are the biggest mistakes that you've seen founders make?
Oh, I have a list of about 100. And my promise to anybody is, if you work with me, you will not make any of the mistakes that I or any of the companies I've been associated with make. You'll get to invent your own. But the biggest one by far is people fighting. The team fighting, the team and the board fighting, the investors and fighting. That sinks more companies than anything else.
What value do you provide to startups you invest in beyond capital?
Experience, energy, and connections.
Mm-hmm, mm-hmm.
I'm not a passive investor.
Yeah, we can see that. No, definitely so much education. Thank you so much. I have a very specific question from somebody from Greece here. What is your view on the long-term potential of Greek tourism hospitality market? And would you be interested in projects that blend profitability with legacy, like luxury resorts with cultural projects in real estate?
No, that probably wouldn't interest me. I don't have an opinion on
market for
potential. I don't have an opinion on it. I think that all tourism will do well, whether it's Greece or Italy or Portugal, but I don't know specifics about specific markets. I'm looking for something, generally speaking, that has much more tech and much less services and much less real estate.
Amazing. Thank you so much. And that was John Stewart, the East Coast angel investor managing Stewart Ventures. And you're welcome to connect with John Stewart. He shared his LinkedIn, and we all appreciate you spending your time and sharing this insights with us. Really useful. Okay, and now we finally will have Todd Yansi. Todd Yansi is Silicon Valley angel investor and strategic advisor investing in AI, banking, cloud platform, cybersecurity, fintech, payments, and SaaS technologies. And questions, since we are still on the questions topic, there was a question, how do you get in front of many angel investors at once? And I want to answer that question by saying, come to our Startup Investor Pitch Lunch, where you will have many investors in the room listening to your pitch, and that's how you will get in front of many angel investors, even if you are somewhere in Greece. Okay, Todd Yansi, please welcome.
Well, thank you. First off, I thought that John's advice and recommendations were just absolutely perfect and spot on. What I would add is that at the end of the day, people buy from people and people invest with people. And so you absolutely have to like the person that you're going to do business with. And there is no greater challenge than to pick the right set of investors who can lead you as an entrepreneur into the next phase, from idea and inspiration to a product that then ultimately achieves market fit. But along that way, I would say that picking the right set of investors are absolutely critical. But from an investor perspective, from my perspective, I want to like the person that I'm going to invest with, because if it's just about the return on investment, there's probably a host of ways to do that. But at the end of the day, I'm not going to enjoy working with somebody who I don't particularly like, admire, or respect. So to me, that's critical. And why that's important is because at the end of the day, these entrepreneurs are going to be selling to not just investors, but to real life customers. And if they can't cross that threshold of building a rapport with an individual, with finding some common topics other than the product that they have, then they're not going to be successful translating that vision of what they have into a real live product that people want. But what I would also add is that you've got to find those desperate buyers. What is it that you have that absolutely solves the need of someone with, for example, their hair on fire, or another way to put it, someone who's in the desert and has no water, and they're willing to pay whatever the price is to get water, even if it's not, it's not Fuji water, it's just going to be water. It might not even be healthy water, but it's at least water. Well, when you're in a startup, that's one of the challenges. You've got to take this vision of this grand idea that you have, and you have to compress it into an initial product offering that will generate some interest, and then that interest will translate back into revenue, and that revenue can then grow in an exponential way because you found those early sets of buyers who are going to be advocating, promoting the product. So I think that's a real critical path, is first and foremost, invest with people that you like. And if you're an entrepreneur, only accept money from those people that you want to and respect. Otherwise, you're just going to have a lot of conflict. And as John said, that's one of the key things that will sink a company, will be, fighting from internally and externally, and for sure with your investors and your board. You don't want that. That's just a waste of everyone's time, and it's a missed opportunity. So, I mean, I have other thoughts and suggestions here, but that would be from the very, very high level. I also would agree with John, timing is everything, and early market investment is sometimes challenging, and later stage has a number of risks associated with it. So that would be my initial recommendation. It's making sure you get the right people in your organization, making sure you get the right investors, and then making sure you get the right early customers as well that will adopt the product, and then be those evangelists that you need to grow.
Okay, amazing. Thank you so much, Todd Yansi. And the questions for you, lightning round. Are you ready?
You're ready.
So awesome. What makes SaaS AI startups exciting to invest into for investors today? Why so many investors prefer investing in SaaS AI?
That's a great question. I think anyone that's been investing in AI, which I've been involved with for the last 6 years, we've seen tremendous, I think, exponential improvement in what AI can deliver. Yet there's a lot of challenges that I think remain. Today, every software company is branding themselves as an AI company. Do you truly have a unique solution? Is it a point, or is it a product that can develop into a company, is the real key question. And then I think it's all about the scale. How can you scale a company? I've seen some great AI startups, except one of the key challenges they've had is how do you take this initial idea that's great for one company and be able to onboard 1,000 companies with the same large language model or the same process. I was pitched the other day by a company that's got a unique solution, AI solution for banking and finance. But when you dig past the I think initial, here's the opportunity, we're looking in the total addressable market, you look at it and you say, but how can you realistically onboard 200 banks with what you've got? You've got a custom solution that is custom engineering, and it's going to take 9 months to a year for each customer. There's nothing that's repeatable here. So, the software at the end of the day has to still be multi-tenant, and it's got to be able to scale, and you've got to be able to, not just deliver a high-level message of the value, but you have to then drill down into the details of how you're going to be able to scale a company. And that's where I think the initial passion and the idea of a project can either really expand or it can just fail. And it's how you scale.
Mm-hmm. Amazing, thank you. What question do you wish founders would ask investors more? The question that they hardly ever ask, but the question that would be important to ask from an investor.
Yeah, I think I would ask the question, why didn't you invest in the last idea? What was, we've all had our, I'd say our failures and our successes. And, Warren Buffett, I think, puts it appropriate when he said it's the heirs of omission, the ones that you don't invest in. So when you look back, which were the ones that you didn't invest in that did ultimately succeed? What was it that either turned you off of that investment or you said it wasn't for me? And that's an important question to ask a new entrepreneur who's pitching you, so that, or I'm sorry, the other way around, that they ask you so that it gives more insight as to how you're thinking, what you're thinking about in terms of, the growth markets and where you've missed as an investor.
Amazing. So how do you see, you've been in Silicon Valley for a while, how do you see the investment industry, VC, angel investment is evolving, how it is changing throughout the years?
Yeah, I think, I've been here for a while. It started as friends talking to friends, and, at, say, the club, or I think it's become very polished, but what I think is missing, and was it Carl that mentioned that you're a history buff, and you brought up the early days of Sequoia. And I think what's missing is operational experience. A lot of the, what I'd say, particularly the larger firms, you have the partners that, have gone through their traditional, went to Harvard, got the MBA, Stanford undergrad. But what's missing is the operational experience. Because at the end of the day, it's not just about money. The money is a commodity. It's about what comes with that money. It's about the connections that you have, but it's also the experience. And for an entrepreneur, do you really want to talk to your lead investor who's going to give you some advice that doesn't have that practical experience of building a company other than watching it be done? Because there are some tough decisions that you have to make along the way. So I think that how it's changed is it's gotten more institutionalized, more commoditized. As it's just money, but you want not what we used to call dumb money, but you want smart money. You want people with the experience in that particular area that can give you, I think, the best path to success. And part of that is, okay, it's not just a checklist. It's just not a process of what you do to start your company, but it's really having some deep conversations and some brainstorming about what you do to scale and expand the company and from an operational perspective.
Amazing. I felt like I read a book. You see, guys, I ask really tough questions to our investors and they give like really brilliant answers. Thank you so much, Todd Yansi. And speaking of successes and failures, what were your biggest investment successes and failures, and what did you learn from those deals?
Yeah, I would say they're one and the same. Versata was a company that I invested in more of a later stage. They were selling a product based on feature functionality, and helping them make that transition into selling a solution was vital. Company had great growth, went public, raised $110 million in its public offering, over $1 billion valuation. And what caused the company to completely implode was missing a revenue, I think, expectation of achieving a revenue target. They were very close. They said, okay, we're going to, our plan is 56 million for the year, and they raised, I'm sorry, the results were 53 million, but they made up 3 million of inflated revenue that wasn't there, and the company imploded. So I think the key lesson there is always have realistic expectations, and it's okay if you don't make that expectation, if you don't deliver that, in this case, the 56 million, but you did deliver 53 million, it would have been okay. But when you do anything that is unethical, it will come back and it will destroy all the great hard work of the people that built the company. So my advice is always, if you think that there's even a line that don't ever get close to it. Just always run your company in the highest ethical way. As Warren Buffett says, it takes 5 minutes to destroy a company. And so you can never, ever cross that ethical line. You do what's right always, even when it's, a challenge.
That's very deep. You see, founders, investors are so human and also so vulnerable. So please don't treat them like they're just wallets. And I just, yeah, there will be more questions about ethics today, etc. But for now, I just want to ask Todd, what are your check sizes for today, and what do you look for to find in a startup apart from the revenue?
Yeah, what I look for is clearly a company that has identified a desperate buyer. So what is it that you have that is needed by someone that doesn't know they need it yet? And I think if you can identify that and speak to it, then the check is whatever the check needs to be.
See, there is no ceiling. Great news.
Well, I think there's always a realistic ceiling, but you can get others, investors involved. But it's really, if you can identify that desperate buyer scenario and how you can address it, yeah, I think there's a huge potential.
Amazing. And my last question for Todd Yansi is, how can you, from a founder overseas, how can you get funded by a US or Silicon Valley angel investor if you are from Canada, Europe, India? Like, what is the path to success if you are even physically not in the United States?
I think it depends on the deal. I think it's everything's possible. It's just how it's pulled off. And there's ways to make investments outside of the U.S. and some places have some challenges. Like India clearly has challenges moving money around, but it can be done. So that's why you want to invest with people that have that experience in not only the area, but also that experience in the solutions you're trying to address.
Will you respond to messages or emails from startups from another country while they're not in the United States, pitching you, seeking investment?
I'm always available. I think if you've got a good idea, as John said, send an email, and then it's all a matter of let's get on the call together and let me understand what you want to do, and let's figure out the best way to get it done.
And very, very final question. What are the required validation milestones, I guess metrics necessary for a European startup who wants to get funding from a US angel investor?
What a great question. I think it comes down to, again, for me, it's what market are you What are you trying to solve for who, and how are you doing that? And then the rest, we can put it together.
Okay, and that was brilliant angel investor Todd Yansi from Silicon Valley. Everybody, thank you so much.
I think you're being very kind, but thank you. I'll take the compliment. But I think look, there's smart people on this call today. And,
everybody is very smart, but we heard from you just now. That is why I'm complimenting you. And definitely we would love to hear more from each of the speakers. If you're open to giving a 1-hour talk, webinar, seminar, in-person event, we are here to support that initiative. As you can see, you can learn so much more from people that are actually inside investment, other than a university professor or I don't know, a journalist writing an article. So talk directly to investors and they will teach you everything from their experience. And next, I want to invite to our stage angel investor, Carl Jones. Carl Jones is a managing partner and founding CEO of Insight Ventures, a seasoned venture capital leader with over 20 years of experience who invests and supports innovative technology companies in AI, healthcare, and cloud infrastructure, while providing strategic guidance, operational excellence, and mentorship to visionary founders. Welcome, Carl Jones. Now, we are excited to hear what you have to share with us.
Well, thank you, Tanya, for the wonderful introduction. Let me ask you one quick question. Most of your audience founders, are they first-time entrepreneurs?
Yes, I would say this is the first round for most. Many of them are global entrepreneurs. Many of them, I would say 60% of our audience is not in the United States and 40% is from United States. So it's definitely a learning experience for many, as it might be their first startup, their first fundraising campaign in America. So they want to get inside American investor head and know how you guys are. Because many of them don't even get to see a face of an investor. They just get email, no reply, or automatic reply, or thank you, it's too early for us. So I'm really happy that we were able to bring the faces of investors to our audience so they can see and get inspired and get motivated and want to come to America and make the American dream come true. So whatever you want to share with this audience, please do.
Okay, I have some pointers that I want to share with all the founders, and it's that I bring 20, 30 years of experience in my first startup in the semiconductor business in 92 when I was in college. So with that, I want to share some pointers that I've seen over my 20 years in venture capital. Being a founder or first-time founder, I think one of the main part is finding a co-founder, a partner. And I hear a lot of founders struggle to find a co-founder. And all I want to say is find someone that complements your skill. If you're a very business savvy, marketing, sales type person, find a strong developer, a technical person, leverage each other's strength and then build your platform little by little. And then as you increase the application, you end up building that momentum. And then a lot of pitches that and then second part, a lot of pitches that I see, a lot of founders are not too keenly aware about their TAM, SAM, and SOM. And I want to emphasize SOM because know what the market is of what you can tackle in the next 1 or 2 years. Really know those numbers, really know the market numbers. You may know it, but research it over and over and then continue to research to find out, if there are any changes or anything new within the market. And then the third is everything we do in venture capital is relationship. It's the same thing as how you see in real estate. It's location. I always emphasize that. And that's why I think relationship matters. So I think when people contact me out of the blue, I kind of like, hey, well, how did we meet? Where did we meet? But I think LinkedIn kind of gives a little bridge. It's like, hey, we have some connection and this and that where we met. And that kind of helps build the bridge a little bit. So relationship is so vital. And then as you build your company, and either you utilize your own money or your family money or your friends' money, it's so vital to manage your cash flow. And even when you get investors' money, treat it like it was yours, not like it was just a flowing water. I mean, treat run your cash flow very efficiently and effectively, because I see a lot of people kind of run their cash flow a little too fast. And so manage your cash flow, bleed it very slowly, manage it carefully, because that would show you a smart founder. And all we want to see is growth, growth, growth. So customer acquisition is so vital. Build your product, your MVP, and then start building your customer base. Who are your paying customer? And then keep growing your customer base. That's so vital, because once you get your customer base, then everyone would want to see your product, and investor would want to jump in as you grow your customer base. And all that said, everything we do in life is about timing. Timing is so vital. So we may not invest now, but continue to maintain the relationship. Don't get upset, or don't get frustrated. Just be happy and just keep building your product. And it's timing for every investor. And so I like to kind of chime on, on what John said about passion, intelligence. That's something I also look at. And then Todd mentioned about problem solution and operational excellence, because the thing that I bring to founder is operation excellence. I launched 5 startup, and then I did my first one in semiconductor, and then also I was in the corporate position, a senior level. And so I seen, and did 12 merger and acquisition and went through 3 IPOs. So, all that, I bring operational excellence to founders. But as the bullets that I mentioned earlier, founder needs to kind of master that part, finding co-founder, the market, the cash flow, the relationship, the growth, and the timing. All those are so key in building your startup company, from conception to the first step in MVP, and then the next step of getting customer after customer after customer, and then you get money coming to you hands and fists. I just want to summarize that real quick, because
Thank you. I appreciate. I was just waiting if there will be any follow-up insights, but that was I actually rarely hear Carl speak more at our pitch events than just ask a short question. And I was sure that you were a very calm, kind of relaxed person, but you bring all this fire. I think our founders got all excited. So excited. So now we have a lightning round of questions. Are you ready?
Yes.
What are the top 3 things you look for in a pitch deck?
I think, like I mentioned, part of it is team. When I talk to founder, I can sense their team dynamic. I can sense the character of the founder. I can sense their drive, their knowledge of the space they want to get into, the experience. I can sense all that. So within 1 or 2 minutes, or within the pitch that they do, and sometimes I talk for half an hour or maybe sometime more, I feel all that out, and it's like I mentioned, it's part about the relationship. You're building that rapport with the founder, and then the chemistry. And one of the things that I see most, and I shared this before, the key part about building a co-founder is have chemistry, synergy, and alignment. I always say, if you have those 3 things, you find a potential partner, because you have to have that click, and then you have to have that synergy. Can we work together? Can we collaborate? And then the alignment is down the road. Can we march down the path of challenges? And that's what makes, as a investor, or as a co-founder or entrepreneur, those things are vital. Those things are important. So pick your co-founder, carefully. And so that's one of the main part. And then of course the SOM, really know your market, because it's so vital to know your market. Because I hear a lot of founders think they know their market, but I've seen so many pitch that I understand the market just a slightly little better, but I want the founder to know more than me, so that I say, oh, okay, then it kind of put a bulb in my mind. It's like, okay, this founder really know his or her stuff, so I'm willing to listen more. So those are some of the 2 main thing. And I guess the third, this is down the road, but how they manage their cash flow. If they're bleeding out left and right and wasting money, because I'm so key on when I look at the pitch, I'm so key on what is the business model. And then what is the financial model? If those things make sense, then okay, let's talk more. And I that's what I really, hone into to look at every pitch deck.
Thank you so much. So next questions are like, must be like really short 1-sentence answers. Can you do that?
Yes.
Awesome. Can MVP be enough to get an investment? Would you invest if there is just an MVP or like a prototype?
Well, I mean, when people say MVP, it has to be a real MVP, something that has really stickiness, not just MVP. Okay, there's a wireframe and there's a little code here and there, and it does this, it does that. It has to be kind of almost a running application where it could have beta client. Okay, I got 1 beta client, 2 beta client, 3 beta client, pay customer or not, or pay beta client or not. But the key part is have a working product that's MVP, and at least have a few customers that say, hey, this works. And they can help you critique your software or whatever application that you're building. So that's what I look for. I mean, it has to be a good MVP, not just some wireframe just brought together and little code works here, a little code works there. So that's what I look for, a strong MVP, let's say that.
Okay.
Oh, I meant
what
I should have gotten it short, but sorry about that.
I know, it was perfect. What do you typically expect from a founder in terms of communication and updates past investment?
Well, I mean, I think communication is so vital because, it's like I say, it's relationship building. So I get, newsletter from a founder, or sometimes they text me or call me. So I think it's all based on, relationship, and relationship is part of that communication. So keeping updating, to the founder and me, it's building that relationship. It's what make me understand the founder more and start getting involved more. And so I'm there to help them to succeed, because if they succeed, we succeed. That's how it works.
Amazing. Or a little unusual question: what kind of services angel investors need today? Basically, what we can sell you that you need.
Well, I mean, I think angel investing has changed over the 20 years. If you look at 20 years ago, the checks were like 100,000, 200,000, but now even super angel investors are putting $1 million or more, even 5 million. So that dynamic has changed. I think a good angel investor should be, should provide, like Todd said, some operational experience, because a founder, if they're fresh out of college, or have some years in college, or have some years in the corporate world or startup world, they don't have everything. So if you're an angel investor, I think you need to help them operationally so that they can scale to their startup to the next level. So like if an angel investor putting in when they're at MVP, okay, start building that customer base, help them with sales, help them with marketing, and then maybe recruiting is a big thing. It's hard for them to recruit a new talent, especially a developer, or down the road they'll need someone that's in sales, or so I think angel investors, and even for me, I would help them find a talent. But again, the one of caution that I have to take is, I have to be an advisor or on the board, because it alleviates the legality of advising too much. So I'm very careful about how much I advise and how I do it.
That's great. I was about to ask about how you support founders, etc. And final question: your check sizes. What are you interested in investing in these days?
Well, my target is in healthcare, longevity, not in bioscience, but in tech science, med tech. And then the check size is between 1 to 5 million. And then my family's in banking, and so we can do up to 5 million or more. And then I'm a part of a group that can do up to 5-10 million, and I'm a senior GP for that. So for me, I have a broad spectrum, and so, but I see everything from the beginning all the way to IPO, and like in every startup, I say that it's all based on timing. It's all based on the market. Like if you look at every IPO every company that goes IPO, it all based on the market, how healthy the market is. Is the market ready for this IPO? And if it's not, then they'll pull back and not go public. And so there's many examples on that. And so when the market bears that momentum, the company will push it into the market, and hopefully they'll get the upside of the shares that they asked for.
Mm-hmm. Amazing. And at the end, Carl Jones, if we have time, maybe you will share with us your perspective on how we see industries changing through the years. I'm sure there's a lot of information, so we might have to move this question to the end. But thank you so much for your brilliant lightning talk. I already feel smarter, and so many insights you won't get from any book or any conference, only directly from our amazing investors. Thank you so much, Carl Jones. And I want to invite to our virtual stage our next speaker, David Mandel, is a partner of Emerging VC, focusing on capital-efficient, late-stage, seed-stage B2B tech startups based in the United States and Canada that are using emerging technologies to solve business challenges. Check sizes up to 500K on 500,000K, sorry, on the first check into seed stage plus possible follow-on. Welcome, David Mandel. We're excited to hear what's happening with the later stage companies as they become a little further on the road. So can't wait to hear your insights. You're welcome to elaborate on what was said earlier, by the way.
Yeah, no, thank you, Tanya, and thank you for the elaborate intro. Kind of pinpointed everything. Yeah, I can see that. It's either from our website or from LinkedIn. That seems to be exactly what we do.
I can do it.
So, I mean, a lot of good information was given. I don't want to be redundant and repeat all the same advice. So I guess I'll give a short intro, because what I like to hear about founders is the genesis story. What's most interesting to me to get excited about a startup is to understand how they came about that problem, because you don't just wake up one morning and say, I want to spend the next decade of my life working on this problem. So there always has to be some catalyst. And the genesis story of how you came into that problem, whether it's your own personal problem from a prior life you're trying to solve and so forth, is often more interesting part to get the initial interest in the startup. So I like to hear that. And with that said, so I'll give, to be fair, I'll give my genesis story of how I am where I am today, and I'll do the short version. But basically, like a lot of the angels here, the typical story is that I was an operator, and I've built and exited 4 businesses that were all basically underwriting businesses, balance sheet kind of companies, over a 25-year period. And if you go back to 2011, 2012, I was pretty clueless to what was going on in Silicon Valley and in tech. I was heads down focused on my industries, and at the time, I had an auto insurance underwriter. We were the second largest non-standard auto underwriter in California, and I also had a subprime auto lender. So I was on both sides of the insurance finance and insurance world, just in California, doing my thing, running operating businesses. And what was interesting is we started to have some vendors come to us at the time with some really innovative products that to me at the time seemed like magic. It's like, wow, this is too good to be true. And they would do some POCs and it's like, wow, this really works. And that pegged my interest to see where the industry was at the time. And I started going to tech conferences, attending events, joined some angel groups, and started to go down the rabbit hole and became a very active angel investor. And it was to a point that a couple of years later, I really wanted to do that and like that better than my day jobs. I like starting companies. When they get bigger and you have several hundred employees and you're dealing with HR and compliance and legal all day long, it's less fun. And so I deliberately hired bankers and exited my 2 remaining active businesses at the time, so I can focus and be a full-time angel investor. So I went from being an operator in regulated kind of enterprise businesses to being an angel investor. In the beginning, I was quite prolific. and pretty diversified, writing a lot of checks. Everything seems exciting. Everything seems amazing. And as time goes on, you start to realize, like, well, maybe that's not so amazing. I've seen 100 others pitching the same idea, and it's not so exciting. And you go back and look now, and most of those investments you probably would have not made today, and you learn from that. So over time, kind of went through that process. And then in 2019, a partner and I decided to make a small fund so we can write bigger checks and pull the money of other associates of ours. And, it was quite a competitive business, and we wanted to have a disciplined, more narrowed focus. And that's where emerging ventures came around. And what's interesting by that is I can kind of tell both sides of the story. I'm on both sides of the fence. I'm an individual angel investor. I'm an active member in a couple of angel groups. I'm chairing the screening committee for Pasadena Angels. So I have the process of how angels and angel groups look at deals, and wearing the angel hat versus also wearing the VC hat, and how venture funds are narrowly looking at deals and kind of the difference in mindset. So I'm open to any questions there may be about any of those nuances and differences between angels and VC, and why you should go to one versus the other, when you should go to one versus the other, and all that, because I'm deeply involved in both worlds at the time and over the past decade plus. So that's the interesting part there. And advice to startups in general. I mean, the main thing, from my perspective, it's all about execution. And what my biggest pet peeve, I guess, and the biggest negative, I think, for startups is they're going out to ask for money very often too early. I hate seeing pitches where they say, oh, yeah, we're about to launch this next week and now we're raising money. It's like, why the hell are you talking to me now and not getting on customers? Go get if you're a week away, go get the damn customers and then come back to me when showing me someone's willing to pay for it. And so it's always about the execution. Build it. Show me you can build it. Show me you can sell it. Show me the right people are willing to pay for it. I get excited. You come to me asking for money when you haven't done any of those things. There's no excuse, especially today. 10 years ago was different. Today, even before the current AI tools, that it is so easy and so inexpensive in most cases to build something and get some early adapters onto it, that there's no excuse to be spending months of your time fundraising without doing that. And so build it, build first, build quick, launch quick. Build an MVP, launch it, get paying customers on it. That will get us excited. I get super excited when I see someone who, with a short amount of time, say 6 months or less, and a small amount of money, has actually built a real product. And I'm talking about, say, B2B SaaS, something that is substantial enough, and also was able to get some credible beta users on it, or actual paying long-term contracts, but at least paid pilots from major enterprises. So it shows me everything. It shows me you can actually build something. It shows me you can get the right, how to do the enterprise sales part, which is a whole different skill set. And that's a tough skill set to learn. And some are just amazing at it. I'm always impressed when they can go out there and get big customers on, because it's not a skill that I have. I would find that the most challenging part if I was a startup founder, and say, wow, you're not only technically smart and can build something, but you have the ability to just get on the phone and reach out and one way or another get all these amazing customers to try your product. I'm impressed. That's the horse I want to bet on. And so build it, sell it. And yes, it's not going to be robust. It's not going to be an amazing product. You're going to have these first customers that are trusting you and want to work with you to improve the product and make it a robust enterprise product. But that's what it takes. That's what you got to do. And the reverse order just doesn't impress me, and I think is a big mistake.
I don't know about you guys, but I was absorbing every sentence and like literally taking notes in my brain. I'm gonna rewatch this video many times, and many of you will do the same, I'm sure. Now, lightning round of quick questions. 30 seconds or one sentence per question. David Mandel. So since you mentioned this, what is the thin line between angel investment and early stage VCs when it is time to switch from raising from an angel to raising from VC?
So the way it is placed out today, you talk about the individual angels, but there's also a lot of angel groups. There's the ACA, the Angel Capital Association, which is an association of angel associations. I attended on behalf of one of our groups about 3 years ago. I was impressed. There was over 300 angel groups from around the United States represented there, and this is just in the US. So there's an amazing amount of angel groups. Now, these angel groups comprise mostly of relatively conservative investors. They're professionals, retired professionals, exited founders, a lot of your typical bankers, lawyers, doctors, executives from every industry, amazing combined skill set and networks. But they have a somewhat conservative mindset. So what I learned over the years, my takeaway, and this is my personal thesis, is that angel investors invest not to lose, while VCs invest to win. And it's a huge difference. So it's not that you get your angel guys to come in early pre-product and then go to VC. It's almost the other way around. It's really just a different mindset, and it's two different classes of investors. And I see startups that I know would be a really good fit for angel investors and for angel groups. And I see startups that I know would be a good fit for a VC. And VCs need that unicorn potential. And if a fund is going to bet on 25 startups, they're okay if 23 go to zero, as long as there's a couple unicorns in there and they can pay off. And angel investors don't think that way. They don't want anything to go to zero. That hurts. It's their own money, and they're perfectly fine investing in something that's safer, that has they see that path to a 5 to 10x exit in 3 to 5 years, and they're happy to put their money on that. And they'll bet and they'll invest in things they understand as well, and in people that they understand and can get along with. Where VCs are just looking for that, unicorn or decacorn kind of fund returner exit. And there's a lot of things that say, okay, this be a great angel investment, but I couldn't possibly put it in a fund. And there's other things like, okay, this is a good VC investment and not. So when I'm getting pitched with my VC hat on, there's a lot of founders who, whether they're pitching me directly or whether I see them at an event I'm participating in or something else, my advice to them is often saying, okay, you're wasting your time pitching VCs. This is not really VC investable because your growth isn't there. Your exit potential isn't there. By your own, if your own deck says that you're going to exit in 5 years for $200 million, that's like your comps for other startups that exit, and you can be a $200 million exit, VCs aren't going to want to talk to you because you're not going to be a unicorn. So they can't even invest in you. No matter how much they like you, they can't invest in you. Angel groups will gobble that up. As an angel investor, I want to invest in you. As a VC, I cannot. And that's really the difference. If you're a slower growing kind of company or a service, it's not going to have the exponential growth. You're not going to be growing your top line 3x year over year continuously and have that hockey stick growth. Then don't pitch VCs, pitch angels. But the same thing, angel groups today are not your first check. They're not investing at you at the idea stage. They want revenue. They want real traction. They want to see, again, the same three things. They want to see you can build something that you can sell it and people are willing to pay for it, because we can't judge that. I would be a horrible judge of what someone in a particular industry is willing to pay for today. I need you to prove to me that they're willing to pay for it and you know how to get their attention and sell it to them.
Mm-hmm. Amazing. Thank you. So that was pure crystallized wisdom. And I'm just so impressed. So what is the best investment you've made so far that you're really proud of?
Oh, boy. Those are different questions, really. Being proud of them and having financial results are two different things. The one that comes to mind right now, because it's just top of mind, which I can't take a lot of credit for, but back in, I believe it was early 2018, I put $100,000 personally into Circle. And it was like, I'm directly on the cap table, but it was a secondary transaction because I specifically looked for that. I wanted to be in the whole, back then Web3 was hot, and it wasn't something for, it was before the fund even, but something I wanted to play in. I pinpointed Circle and a few others. So I had 100,000 in Circle, which IPO'd in June, and at IPO, it was about a 53x. So that, it was had 40,000 shares of Circle. Still hold them because they're locked up and the price has been fluctuating. I think this morning it's about 130 a share. So we'll see where it ends when the lockup expires in another 3 months. But that's 100,000 that became at least $5 million and hopefully more.
Deal you regret the most about that you didn't make?
There's a lot. My anti-portfolio is probably better than my portfolio, but I don't have FOMO. Being a lifelong underwriter, that's where, I really try to not get into a FOMO mentality. And there's a lot of deals that I turn down often because they're too early or it's something I don't understand. And I see them later, doing really well, raising at a much higher multiple, having exit, and that's perfectly fine. It's like, good for them. But I still go back. The main thing is, did I make the right decision at the time with the information I had? That's what really matters. And a lot of times I say, yeah, I would have made the same decision today. And the corollary to that somewhat is there's a lot of deals that I turned down for being too early. But if I like them in general and say, if you only had X, Y, and Z, I would be happy to invest. I've invested several times in startups at a higher valuation a year and a half later, sometimes only 6 months later, but usually about average 12 months later, when they took notes and came back to me. And I'm impressed that they did come back to me and that they did what I said and say, hey, a year ago, you told me if you have X, Y, and Z, you would invest. And I think we did exactly that and take a look. And I've invested several times in deals like that where they did come back to me after meeting certain milestones. So it works both ways. I missed out and I came in and I paid a price for it. I might have paid 2x or 3x more a year later, but I'm still happy that I did.
Wow, that is really, really encouraging to hear from you. Just always follow up with investors, guys.
So I'll definitely pay attention to feedback. When investors are blowing you off and they're saying, they're not necessarily just blowing you off. Sometimes they really mean what they say. If they're telling you, here's why I can't invest in you today, and here's what I need to see, they often mean that. Otherwise, they wouldn't be that specific. So if you're getting specific feedback on a no, if the no comes with conditions, pay attention to those conditions.
Hottest startup you see on the market today that you would want to invest in?
So maybe a longer answer to that, or a side. What I'm frustrated by today is generative AI and then agentic AI, because I'm super excited about where the technology is, but frustrated by the overwhelming number of startups trying to jump in on that. And with most of them are just API wrappers doing AI for every problem of every vertical and every industry. And I actually wrote a blog post about that on my blog right after YC's last batch, so probably about 2 months ago, when the last batch came out. And about half of the entire batch was agentic AI, because they actually put out a call for that. And also it went from a year before being all generative AI, now being all agentic AI. And that's great. I love the idea of AI agents replacing human and actually doing the work. And that's the future. That's amazing how quickly it's coming. But having startups launch those and do it so quickly and so easily, I see no moats on most of these. It's like, okay, what you built, it's great that you can build it and that you launched it and you did everything I usually want, but that meant something before. And today, when you can do that over a weekend, I don't know what to make out of that. And if you did that over a weekend, why are you worth, $10 or $20 million today? What's stopping my evil twin from, say, hiring, 2 Stanford students to build a clone of that over the summer. I can pay them $500,000 and have them build that for me. Why should I value you it? Instead of giving you $500,000 for 5%, I can own the whole thing. So I can't, if I can think about it that way, it's like, what, how do you process that? So I see a lot of these not having any moat. So while I'm excited about the technology, I'm hesitant to invest in any of them right now. But it's moving so fast. And what they're launching as a separate company today will often be a feature of one, the actual infrastructure, like OpenAI or Google or anyone else will have that built in a few months as a feature, and your whole company won't be needed anymore. Or two, it'll be a feature of the core systems that these industries are using, because they all want to add AI. And the startup's answer is always, well, they'll just buy us instead of building it. It's like, well, but there's 100 of you. I'll buy one of them, and then what happens to the other 99? If one is integrated and now it's the tool and the other 99 are dead. And, so that's the problem. I mean, for every, let's say, for law, for accounting, for everything, I've seen over 100 of each, all trying to do something similar in some way or another. And because I can't tell them apart and I don't know who's going to be the winner, I just don't invest in any of them. It was the same, during COVID for telehealth, or before that, it was the neobanks, or, there's always a hype and a bubble and everyone tries to jump in on it. And then 99% of them die. And so that's kind of what I'm not excited about today. I'm excited about the technology. I'm not excited about any particular startup within that particular industry. What I am excited to invest in today are still kind of especially as an angel, the kind of boring businesses, the boring startups, where the moat is the network and the skills of the founders. If I invested in a startup, I won't even give the name. They are, I usually don't do ed tech, but this is a team that's doing their third time in a row at ed tech. They built an ed tech, sold it to private equity, built another ed tech, sold it to private equity. Now they're building their third one, solving a problem that they saw that was missing before. And it's coming directly from their customers. And their superpower is their ability to sell to school districts. It's awfully hard to sell to schools. And once you know how, over like a 20-year career, you built the network and the ability to sell, and this could be in any other sector, but they can sell, in this particular case, to public school districts. It's like, that's not replicable. Two Stanford kids can't do that tomorrow. They can build the tech better than these guys can, maybe, but they won't know how to sell
Mandel,
it.
I hate to interrupt your brilliant thought, but we have like 30 seconds or less per question. I have 2 more questions for you. Okay. Most common challenges that you see startups face post-investment?
Scaling. It's one thing to sell to a few early adopters. Having a repeatable, scalable sales process, especially in enterprise, is a whole different ball game and something they often underestimate.
Do you do non-equity investment? Somebody was pitching crypto trading software that makes the revenue that is non-equity, I guess, the crypto tokens investment.
I don't do any token investments.
Are you willing to invest in a company through direct purchase of shares without SAFE? But somebody sent this question.
I prefer priced preferred rounds over safes.
Okay, so, and final question, what gives you FOMO? Like what can a startup possibly say to make you an emotional investment?
I'm sorry?
What can give you a FOMO, fear of missing out?
Okay.
What can a startup say or show you so you would get emotionally involved and make an emotional decision as an angel to invest?
I try pretty hard not to make emotional decisions, and that's where I don't decide on the spot. I always take an analytical approach. So I'm maybe the wrong guy to answer that, because I've been over 30 years as an underwriter. So I try to remove emotion from the equation.
No emotions from investors, guys. Okay, that was just pure crystallized wisdom from David Mandel and everybody who is in between angel and VC rounds. Message David. You can share your contact information in comments. All angels and all investors in the room, you're welcome to take some questions in the comments while we're listening to all these brilliant talks. And you're welcome to network with each other as well. So next we have a brilliant next speaker, Stephan Reckie. And I understand, Stephan, it's really hard to say what's already hasn't been said today, but I'm sure you can do great. I can see a rocket on the background of your screen, so you can talk about space. Stephan Reckie is a global investor, serial entrepreneur, and connector of visionary founders, leading Gen Faith and angel funding to scale impactful ventures in areas such as emerging space economy. Wow, space economy. We really want to hear more about that. So what do you invest in today, and why? What are your current interests?
Well, is this the lightning round, or can I go in and kind of?
I know that this is your talk. We will not.
Okay, good. Well, you know, the thing that first of all, I want to thank the other guys on the phone on the Zoom, because they really uncovered a lot of the common things, and I agree with most of them. You know, primarily it's the people and the team and all that. So made my presentation a little easier, my talk a little easier, because I don't have to repeat what they said. But what I look for is things, and you mentioned it in the intro, impactful stuff, things that make sense to me, that have some meaning to life, meaning to purpose to society. You know, everyone has their, you know, their thesis, and I've chosen to do that in my end career or post career or whatever you want to call it, in my phase of life. When I put my money into something, I want to see it do something cool. I want to be able to understand what it does, and I want to be able to trust and respect the people that are involved in the business. So I don't invest in ideas, I invest in businesses. Now, of course, the business will be based on an idea, but it has to be a business. And what makes it a business? That they can know how to generate revenue. They have the people that can actually ask for sales orders. They have the ability to communicate within the company and scale. So all those things put together is what I look for in businesses. So just to kind of go back a little bit, so I started in electrical engineering, and I worked for a computer company back in the late 80s. And then I went into what I thought was going to be an easy career, sales. I went into technical sales because I was an engineer, and all these salespeople would coming to my office and driving their BMWs and having big houses and all that kind of stuff. And I decided that why don't I get into an occupation that the harder I work or the smarter I work, the more money I make. Well, the good news was I did really well for a bunch of decades in technical sales, culminating into a director position of a company that got bought for almost $1 billion in the late 90s. I decided all along, as I was making friends in the industry, to help them as an angel, but it was just really more friends and family. So in that part of that transition, I figured I made a big exit, and I had a really trusted network of people, mostly from my high school when I went to in the Bronx, and we started an angel group. And because we wanted to kind of make it more professional, make it more scalable, more share the diligence. That's what Angelus is. We call it a trust-based angel group. We have about 45 investors globally, and most of us went to high school together in the Bronx. And the key there is most of us are either first or second generation. So my parents came from Russia with nothing, and it's not like I inherited money. I worked hard. So it's actually all the money that we put in, and all of us make decisions individually. It's stuff that we worked hard at, and we respect. Just like the theme of what the other guys have said, when we put money into a company, we want the company to use that money wisely, frugally. So we look at use of funds, and how is the fact that I'm going to be an investor in that company going to ultimately give me a return? Because I'm investing as a professional to get a return. So I want to be able to have that picture painted for me. A lot of entrepreneurs forget that. They forget that they have to sell me on what they're doing, and they have to explain to me how, if I jump on their train, I'm going to be successful along with them. So I look for that as a key indicator. I've also found that when I first started investing, there's a lot of terminology. There's a lot of secret words that are going on. So I've been, for the past about half dozen years or so, flown around the world to speak publicly. When an entrepreneur speaks, what I hear is an investor really uncovering all this, like what you're trying to do, Tanya, is get people to connect with the investors so that they can understand what's in my mindset, why am I investing, and what are all these big words that people use or abuse, right, or don't understand. So I can just go through quickly. I don't want to take too much time, but the first one that I'm always amazed at is when I ask people who their competition is. And they usually want to say, we don't have any, because they want to be this, I'm out doing this amazing thing that no one else can do. So first of all, you want to make sure that how can they defend this position? I think David, you said it, I can always get some students and put my own money into it and run this, but realistically, so here's some advice to the entrepreneurs or the founders that are on the call. Think about your 6-word elevator pitch, maybe 8 words or whatever. Put that into Google. If you Google those words, you should know all those companies that do exactly what you do, because that's what I'm going to do when I'm talking to you. And I'm going to say, what about XYZ? And if you say, I've never heard of them, or I don't know, shame on you, because you have to come in. And I think some other folks said, when you meet me, come prepared. Come prepared for 2 things. Come prepared with understanding who I am, and you can go through my bio. I'm very visible on LinkedIn and on Jealous Funding. You can understand what we look for. So come prepared, just like when you go look for a job. When you're doing a job interview, you don't go and walk into the door saying, XYZ company, tell me what you do. As a job interviewee, you know everything about that company, and you come with smart questions. So, and I think some of the folks said, don't give me an hour pitch. Give me a short pitch, make it understandable. And again, make it something that aligns with what you think I want to hear. And then give me those leading teasers so that I ask you as a founder or an entrepreneur, I ask you, give me more. Get me excited from the get-go. And I think the first 5 minutes of any call, and I think we can all agree, we do thousands of these. We've done thousands of these interviews, whether it's remotely. Now it's big things, not remotely, but a lot of them were in person, or even people would FedEx me things, back before Zoom. So once you get that lock in that first couple of minutes, that's the most important time that you have with any, whether it's angel or VC, private equity, any people, it's that first impression you have to make. And what I look for is truthfulness. I look for ethics. I look for honesty, because I don't want to be surprised down the line by something you're hiding, because chances are I'll find out, or I'll be surprised. I'll be really pissed at you. So it's some, folks mentioned here, build that relationship with me. Another thing I look for is, and people say, everyone, I build it and it'll come. Everyone will want this product. I don't like that. It scares me. I want to be able to understand who your early adopters are, what your target niche market size is, what the niche is, and then go from there. Bottom up. Explain to me bottom up, not give me the top down approach of here are our crazy financial models, which everyone has a hockey stick. But if I can understand where you're going to come from, and specifically over what time frame, I think David said it, I take notes. So if I say no to you, I'll take notes. And if you call me months later, I'll see, did you really meet what you said you were going to do? And I hope to hear you've exceeded what you told me you're going to do, and that's going to get me interested. So the note taking is both ways. You should be taking notes on what I say. And then I'll just leave it as one last thing is, if I say no and we've spent time together, the biggest mistake an entrepreneur can make is not to ask me why, right? So there's a lot of time that's been invested in talking to me, and I should be able to clearly or succinctly say why. And if you ask why, you might realize that you might have missed something. You might not have hit some key point that you should have stressed, so it's a missed opportunity. So I really want to urge people to treat this as a people-to-people engagement, treat this as a respectful engagement. Like you said, we're not an ATM machine, right? And really use your time wisely. If you're going to take the time and do a pitch, set up a next step at the end of the pitch, but also if you hear a no quickly, ask why. Maybe is kind of the worst things because that kind of drags things on, but ask what's needed to move forward to the next step. It's all about repeatable processes. And let me leave it with one last thing is don't go fundraising when you're broke, because it's like walking into a supermarket when you're hungry. You're going to buy the silliest thing and you're going to fill your stomach with really unhealthy things. So don't be desperate. Don't go when you're broke. Plan your fundraising. And if you're going to fundraise for a long amount of time as possible, because if not, who's going to run your company if you're always fundraising? So hopefully I've met the time requirements, Tanya. Let me know if
amazing. I just wanted to add that most of the founders I see, they're definitely hungry and they're gonna last minute, very super desperate, and they're really seeking aggressively whoever will invest in them. They just burn through their last the savings, and yes, this is just one day can solve their future. That's kind of situation I see founders at this day. So usually when times are good, like they don't even think. That's a learning experience. You guys plan ahead and like start fundraising, like plan, have a perspective. So don't be desperate, and then that will not lead you to making bad decisions. Okay, amazing. Thank you so much, Stephan Reckie. Are you ready for a lightning round of questions from me for 30 seconds or less per answer?
Sure.
Amazing. The best startup pitch you can remember?
Without naming the company, a company that was doing pharmaceutical injectables that had amazing illustrations of if they reduced needles or eliminated needles in vaccines, what the impact was, and they had a picture of kids with needles stuck in their hands and all that stuff. So it was really something that emotionally got me because of what they were doing and what they were solving.
Mm-hmm. So impact driven. Okay, how actually, you mentioned building a relationship with investor. How do you actually build a relationship with an investor when all you get is like his LinkedIn page and an email?
I think that's really easy. So again, I would follow that investor, not follow like stalk, but like run after them, but follow them socially, right? In terms of social media, listen to what they've said, and maybe they had TED Talks or maybe the last like this kind of video, right? Watch these things and get inside their head and say, that really resonated with me by what you said, and I want to tell you why, I'm aligned with you. It's really an alignment of some proof or material that's available already, because the cold stuff is almost ridiculous. I get so many LinkedIn things or whatever, however they get my email address, and it's like super spam. So and again, we just to give you an order of magnitude. So we've been doing this since 2012, about 13 years. We looked at 4,000 or plus deals. So that's a lot per year. So you just got to really figure out how to get to the top of my inbox. And I think someone said referrals through someone in my network that's trusting.
Okay, great. Can you share investment that didn't go as you expected and what you learned from that experience?
That didn't go?
Yeah.
Again, without naming names, there's a company in Armenia that I was introduced to by Microsoft. I actually helped them get to the US. They relied too much on other startups to do their partnerships, and they just didn't pick the right startups, and their startup partners failed. But here's a story I think that resonates with some of the folks that are on call here. I lost my money, but I was able to witness the birth of their first baby. So I went to the hospital. So it's about developing a friendship and a relationship afterwards.
Like actual baby, you're not figuratively speaking, but like
right, a real baby. Yes, and
okay.
I'm a godparent of the baby. Yes.
Oh my God! So you didn't get your money, but you got a godparent title.
There you go. So
awesome
I paid to be a godparent.
Great compensation. So. And something you will never regret about, I'm sure.
That's right. So that you try to look for the silver lining in all this. You do have to kind of refresh your questioning. You kind of refine your questioning so you don't forget to ask the right questions so that you don't make the same mistakes twice. We all make mistakes. I'm not looking for a perfect entrepreneur, and hopefully people aren't looking for perfect investors. I don't think that exists. right? So I think the reality is we're human. We're going to make mistakes. We want to minimize it. And as an investor, I look for as less of a risky opportunity as possible. The startup world, that's hard to say, but de-risk whatever problems might come up.
As my learning pro tip here is like how you build the relationship with the investor by making him a godfather of your child, and also how do you keep investor happy if your startup failed, make him a godfather of your child.
There you go. Afterwards, but ideally, let's celebrate together with your success for the exit of your company.
So. Yeah, that's what we're rooting for. So can you share okay, mistakes startups do all over and over again, like top 3 mistakes that you hate?
Not stopping to ask the right questions and not listening to how the answers are. So ask the right questions and listen to the answer and follow it. Don't feel, I hate the word pitch, because pitch means I'm just throwing a ball somewhere. It has to be an interactive conversation. I do pitch training. I teach at the local university how to do pitches, and I hate that. I say it's not about pitching. It's about discussing. It's about sharing the idea. And if you have to use slides, you shouldn't have to use slides to present your company. So I think people get hung up in that. They get hung up in delivering the message versus understanding why are they delivering that message and how are they going to make me do a reaction, make an action, what the next step is.
The crisis you as an angel investor have a startup helped solve crisis.
What crisis would you, sorry, can you repeat that?
Crisis, as an angel investor, what crisis have you helped a startup to solve? Like you already mentioned the story, so maybe that was.
Internal, how to fire someone. So I get involved being on a board or advisor, and how do you, at what point do you say enough is enough, time to let go of that person because they're not helping? And a lot of founders have problems doing that. So they need someone that they can kind of bounce the idea of how to do this, because ultimately it's not growing the company, it's hurting the company.
What is your experience dealing with startups who failed, and how does startup even understand that they failed and it's time to stop to kill the idea?
It's an interesting one too. I've been working with one company as an investor for, well, it was 10 years. And I said, at some point, are you happy with what you're doing? Or is it time to really figure out what you can do next? It's okay. It's okay. You feel responsible to your employees and also to your investors. But at the end of the day, you're beating a dead horse against the wall. So it's okay to say enough is enough. And that takes a little bit of maturity. It takes a lot of responsibility. It takes a little bit being above who you are to say, okay, I can call it quits. I can wind things down. So that's a hard part.
Thank you so much, Stephan, for sharing your open-hearted and sincere experiences with us. That was very insightful, very helpful for me, I'm sure, and so many things to learn and to take notes about. So we've covered a lot of ground. I don't know what our next speaker will have to say, but I'm sure he will, because he has a global expertise investing in startups, not just in the United States, but also in Europe. And I want to bring to the stage our next and final speaker for today, Jay Latta, an angel investor from the United States and Europe, focused on original ideas, breakthrough technologies shaping the future of humanity. His investment focus is humanoids, human augmentation, aerospace, defense, longevity. And welcome, Jay Latta. And you have all the time that you want now to share your wisdom. If there is anything left, honestly, I think like we had a compressed MBA course on fundraising.
Yeah. So thank you, Tanya. What to say, not to repeat anyone. The thing is
unexpected.
Yeah. My roots are in innovation. I've been in various corporates working on innovation, developed even my own methodology. I made my money in the 90s in the diamond business. So I don't rely on making money from something else. This gave me this kind of, let's say, independence that I don't need to go onto everything. I can choose. In the corporate, which I deeply hate, I've learned how difficult it is to deal with a team, to deal with the wrong structures, with all of these hierarchies. Through this innovation, I came more and more into touch also with venture capital, with startups, with business angels, and so on. So this was my journey through the Silicon Valley, then to Europe. What I've learned here is how it changed. Raising money changed radically. Silicon Valley in the 70s was different than in the 90s, than in the 2000s, than it is now. It's not silicon anymore. It went through software, now to SaaS. Sometimes even, I would say, it's Scam Valley. If we look onto how many zombie unicorns are running around that only can survive because fresh money is being flooded in, they will never get revenue. So understanding this is very important for startups, for founders. Where do I want to go? How do I have to pitch? Raising money is not about convincing investors that you are a genius. Tanya, you said it, when you are in LA, everyone wants to be a superstar, so they pitch it like this. In tech, it's also a little different between, am I into software? Then, of course, make an MVP, make it during a weekend is easy. If you are into hardware, what I prefer, then you are struggling with it because you need technical approval. If it's advanced air mobility, then you need approval from the FAA and so on. So the processes are a little bit longer and you burn far more money. Then as well, I've been laughing when Carl said that in Business Angel that they give up to 5 million. Woo-ha! Here in Europe, 5 million is a full-grown VC. You have to back in Germany for 50,000, 400,000, 450,000. This is huge. So this just to demonstrate how different this world is. That US has a different focus than Europe. Then if you would deal with Japan, they would be highly shocked what you've been saying right now, because they speak simply completely different with their investors. So it's very important simply to see in what domain am I working, what is my cultural background, and then, of course, how to deal with a founder from India, from Ukraine, from Middle East, and so on. So it's really showing that we can trust, or it's a mutual trust that we need to bring in, but the founder needs to be believable. He has to come prepared and focused. I'm getting every day roughly 250 to 300 pitches via email. I don't have time to check this. So if you don't catch my attention immediately through a one-pager, it's simply gone. You have to simply resend me. One of my colleagues said that, I think it was Stephan, that the investor has to manage to be the latest one, the freshest impression in his mailbox. So it's really quite hard to deal with this, to learn this business. With these pitches, of course, some investors will write a check. Most of them will politely decline. Why? Survival is the exception. It's not the rule. We are having roughly 400 million founders globally that identify as founders. They do something. In average, 100 million adventures are being started every year. 85% of these don't survive the first 12 months. When we look into the VC space, we have something, depending on the metrics, 6,000 till 10,000 VC companies dealing with something. Then we have countless angel investors, family offices, yada, yada, and so on. So this huge number of entrepreneurs are competing for the attention of these few people, which is very hard. And when I said raising money changed before the pandemic, for example, some of my colleagues in the Silicon Valley, I worked with them in pre-seed and seed. Now they start Series A. So also this changed. There is a huge gap currently to get on fresh money, which cannot everything be covered with angel investors. Not everyone can spit out 5 million, even if they combine their funds. In Europe, it's really disastrous. So it's really how these things are changing. I know VCs that are right now only in real estate, not in prop tech, real in concrete. So it's really currently a very crazy time. I see more and more progress, for example, from Middle East. A lot of money is coming from there, very curious, very, very forward thinking. So as I said, survival is the exception, not the rule. What do we look into the game as investors? I mean, we in this round, we all have our preferences. We look onto different things. When I hear another post on LinkedIn, oh, this is the perfect pitch deck, just to tickle you, Stephan, we see showcased what Sequoia looks into, what Kawasaki looks into, what this, what that, and so on. Honestly, this is bullshit. This is nonsense. You cannot, if this ideal pitch deck would exist, you would be flooded with money. It's nonsense. And if we, just our group, would give individual lessons, the people would get different flavors of what we are looking into. We are different individuals. Our own colleagues would look into things differently. So it's mostly to understand that not all investors think in the same way. Some are number crunchers, how I call it, so ex-bankers, hedge fund managers, and so on. They are driven by probabilities, by ROI models. They want to see a nice deck, even not understanding it. Most important is that it's colorful. They want to see the math behind. They are usually not into experimenting. They don't invest into dreams. They invest into outcomes that are predictable. Then we have the tech-savvy people that understand somehow the matter behind, that came from our ex-founders and so on. They can see a potential of the product. They understand the vision. They are looking into the team. They are willing to take calculated risk, of course, if they believe into the founder. And then we have, of course, some wealthy individuals. I call it independent, passion-driven investors that can afford a bigger check. They invest for conviction. They have a slightly bigger tolerance for the unusual. Mostly, my experience here is that, especially in Europe, family offices are mostly into this very progressive thinking if they are into tech. Of course, scale changes as well some things. Big funds have scouts, analysts, structure processes, and so on. They mostly rely on data, while the smaller funds or angels, they have to do everything by themselves, or they are just a small group of people. So the whole due diligence, the checks, mostly the stuff is then a gut feeling. Not the structures banker style, but it's really not an emotional thing. If you are too emotional with this stuff, you end up in a marriage, which you don't want to. So for founders, it's mostly important to know the audience, whom you are pitching to. Get as many informations as you can about these guys. What is his background? Does he understand this and that? Do I have to explain it in a different way? For example, when I'm on stage and as a judge and someone mentions in a product where it does not belong to AI, of course I ask, why do you put AI on a sponge, right? It doesn't make sense. What is the outcome? Why? I ask questions. So also then you figure out what these investors care about. What are they looking for? So, of course, it's the plausibility. Can this company realistically succeed? What is, I think David said it, it's about the storytelling. What is your genesis? This is very important. It's part of your history, not just the facts and figures, but how did you came into it? Because then I can somehow understand, did you really identify a problem, or is it just your problem where no one will pay for? It's about, sure, of course, we need to see traction. So show progress, not just a wireframe. We need to see how many users do you have? Are the people willing to do something? Prototypes, yada, yada. Evidence matters more than promises. Ecosystems, I believe into ecosystems. This is also how I bundle my invests, because then it's far easier for me. One example, I right now invested into an airport infrastructure company, electrification of airports, and of course I have some other from electrification, from sustainability, that I can simply bring into it and bundle it, which makes a super cool outcome for me. So ecosystems, who else is in this space? How Stephan said, if you just blur around, I don't have any competition. Hey, for me, it's 5 minutes to figure out, right? So be honest with the competitors. What's happening in this market? What is the latest thing? Will your solution be obsolete in 5 years because a new regulation comes? A team and network. Yeah, it's a little bit who's on your team. It's always this kind of, we have ex-Google guys, we have ex-Apple guys, and so it doesn't mean anything. It's really about how you talk. How can I trust your expertise? If a CEO, if a founder is not willing to talk to me and sends over some marketing guys, thank you for the dinner. That's it. We are also looking, who are your advisors? Who are the other investors? Do I want to be the lead investor? What is the expectation? Mostly people don't know this. Market potential. Yeah, sure, of course. I love it when a new market is born. When we don't just get a share of a potential market, of a market, existing market, but if there is really a possibility to unlock a completely new market. This is something where I get goosebumps. Emerging trends, not just these giant existing markets. This can be very boring because, again, how my colleague said, if it can be done over a weekend, how can you make sure that someone else doesn't make it over a weekend? So all of these things, these are the questions that I'm asking, what founders need to be prepared for. So do your homework, tailor your pitch to the investor. Mostly I recommend to have multiple pitches prepared, and I prefer a one-pager, a real one-pager, mostly on infographics to give me what I need to see within 20 seconds. Speak the language of the investors. So numbers, milestones, realistic timelines, be factual, check your claims, don't exaggerate. When I hear, oh, this is what happened, for example, in the whole metaverse thing. This is a 14 trillion market. This number was announced just once in a study from McKinsey, and everyone was referring to this. This is nonsense. Or when I hear stuff like, imagine if Netflix and Uber would have a child. Sorry, no way. I want to hear what is original. So avoiding mistakes, don't present unverified numbers, don't overinflate your market share, all of these trillion-dollar markets. The investors will roll their eyes immediately. So any kind of fuzzy analogies, simply stay how you are, try to explain us in easy ways, in easy words, what you are trying to do, and don't pretend to be someone else. This is my biggest recall.
Amazing, brilliant. And that was a state-of-the-art fundraising lesson from Latta. Wow, that was really very intense. I learned so much, but we still have a lightning question segment for you. So I prepared the spiciest questions for Latta, and remember, you have 30 seconds or less. And because I know you're a brilliant speaker and you can be very outspoken, so you will be able to do it, even though the questions are really tricky. So now imagine Latta, you are in elevator with a founder who is a foreign founder. It can be, I don't know, India, China, Europe, you name it, Brazil. And while you're in the elevator, you need to do 1 minute elevator pitch to that founder to teach them how to do fundraising in the United States to succeed and be able to successfully close their first round. 1 minute, go.
Pitching for the US market. The US guys want to hear mostly how do you want to conquer the world? They need to hear the big story. In Germany, we want to hear your baby steps. Make it step by step so that we can, it takes longer. In the US, it's really this kind of amaze them. So prepare really this catchy thing, make your initial starter like the candy wrap. This is what I can give them.
Networking tip for meeting investors at the events and conferences. How do you approach an investor? What do you say? What are maybe not standard tips that you would give? What is the best way to get a hold of an investor offline, that if it is not an email, some kind of like a meeting on the street, a coffee shop? You see an investor in a coffee shop, what do you say?
So my experience is that mostly at events, investors stay in their investors booth. They don't really like to walk around, and they even hide their badge not to show.
I ran away really quickly. I was able to actually get a hold of Peter Thiel in the elevator because when he was on the stage, I decided to go take a coffee. And he really was on his way to run away from stage, so nobody could catch him. But I was waiting for him in the elevator with a cup of coffee. Only just for me, unfortunately, but that worked. What are there?
Peter would leave the elevator if he would be trapped with me inside. He knows that I hate Palantir. Okay, so how do you catch an investor? Simply be friendly, be respectful. The thing is, how my colleague said, it's about chemistry. We don't need to be friends. I would say we are no friends because it's about money. Friendship breaks on money. But it's about respectful. It's about this chemistry. If someone behaves like an asshole, I simply don't give him money, even if it's the most brilliant thing ever. It does not work. So stay how you are. Be friendly. Be curious. Simply try to have a meaningful conversation. Don't pitch immediately. Something less is more. Have this fantastic conversation where the investor is curious about you. Then it's something sustainable. If you just give me the card in my hand and just immediately bomb me with your 150 pages business plan and so on, sorry, I'm gone.
Amazing. Okay, so 1 minute for you to teach a founder how to go from idea to revenue. Actual question.
You need a lot of humor. So I call this multi-perspectivity. So walk around your solution, walk around the problem. See it unbiased from all angles, from all the facets. Have you missed something? How I've said before, is it just your problem? Or have you really identified a solution for a general problem? Because if it's just your problem, there is no way how to scale it, how to make it worth something. So the first real thing is to understand what you are doing. I hear in recent times, for example, when it comes into software solutions, that people started to do this kind of vibe coding. Fuck it. Sorry for my language. When someone tells me this, I throw them out of my office because you don't understand the basics. You don't understand how to read code. You don't understand what the error message tells you. It's like a script kiddie in hacking. He does not understand what he's doing. So a founder needs to understand what his mission is. If he can't explain this to me, like Richard Feynman said, if you can't explain it to a 10-year-old, you've not understood it. That simple it is. Break it down, understand it, then you can explain it, and then it scales. Because you can tell the story to everyone and they will understand it.
Amazing. And my final question that is coming from female founders, would you give an advice for female founders in their fundraising? Is there any gender specifics or is just all the same?
I'm very, very sorry to say this. Female founders, I'm a huge fan of female founders. I support them. But we are currently seeing, I call it the Harvey Weinstein momentum in investment for female founders. Some founders reach out to me, are crying on the phone because they had the most disgusting talks with male founders, with male investors, sorry, where they tell them, here is my room key, go and do your job before I do mine. And this happens more and more frequently. So
that is something unusual. Maybe that's a European thing because my
no. This happened in the US. This happened in the US and in Canada. In the US and in Canada. I've not had this in France, in Italy, in Germany. So my recall here is look for a strong network for people to exchange your experiences. Find people you can trust, how to bypass, how to deal with things, even if they are disturbing.
I want to address our investor panel. Any other advice for female founders on their fundraising journey? What is your experience with female founders? What can you recommend? Because we want to bring more female founders to our network. And unfortunately, they're very rare. As you can see, I didn't succeed to bring a female investor to this panel. So, and we're really struggling. By the way, next startup pitch event, we will have more female founders, which some of them are in this room. So I'm specifically asking this question for this girl, women. Please let me know your thoughts on female fundraising strategies, if any.
Well, I mean, I think in Silicon Valley, that culture has evolved and changed, but I understand what Jay is saying. And so I think, we're in a better world now. I mean, there's a lot of support of female founders. And also there's up and coming and even many more VC females in Silicon Valley. So, I mean, we went through that curve, 15 years ago plus or somewhere around there. And so I think we have, have gotten, over that. So, and then in terms of, Jay mentioned about, the 5 million that I mentioned, in Silicon Valley, when we have super angel investor and super angel investor group, they can do up to 5 million. But generally, as a small angel or regular angels, they do, 100 or 500,000 or something, and maybe up to 1 million. But the range of most super angel investors, they can do, the 1 to 5 million, and then they can do follow-on round and even into the A series round as well. So I just want to clarify that.
Mm-hmm. Okay. Well, any final thoughts, any elaboration on anybody's talk and responses to questions? Maybe you spotted some cool question in the audience you want to address. So just a free open mic opportunity for investors, not for the audience. Anybody? Okay, and that would be a wrap. We've covered a lot of ground, tons of learnings earned. That was just so transformative, like getting an executive MBA and fundraising, but just I think I see the world now through angel investor eyes. This is priceless. Thank you guys for sharing your raw, unfiltered, sincere experiences, for being really open with us, for willing to support, to help founders, global founders. It is such a rare opportunity to get to hear from you in person, see your faces, hear your perspective, how you think, hear your life experiences. And I think that helps us to demystify a lot of things of angel investors and makes helps us see you as human beings, right? As our possible friends. Thank you again for bringing so much value to this room, for sharing so much wisdom and so many insights, for teaching us how investors really think, how they make decisions, how they invest. I'm sure our audience have learned so much, and it was so helpful, and everybody is super grateful. So I'm sure everybody now will get their rounds closed really fast. And if you want to pitch our wonderful investors that you've met here today and other investors, we have over 5,000 investors in our global network. You are welcome to join our next Startup Investor Pitch Launch online, where you get a chance to pitch investors live from this stage. And I am your host, Tanya Mitchell. We're happy to welcome you on our next Startup Investor Pitch Launch. You can send us your decks to my email, dealflow@investorpitchlaunch.com, and we will see you on our next pitch event really soon. Thank you all for being with us today, and we're looking forward to having you at Mission to Mars Academy and Startup Investor Pitch Launch events again. It was Tanya Mitchell. Thank you so much, everybody. My applause, and wishing everybody a great fundraising season ahead, many cool deals, and I'm sure your email boxes will get flooded with pitch decks from our founders who are in the room today, and many others who will watch this in the recording. Thank you again. I couldn't be more thankful for your time and your expertise that you shared today. Awesome. And that's a wrap. I will be sharing the video recording with everybody, including the chat conversation that was very insightful, I'm sure, but I had no time to keep a track of it. Thank you. Bye. Bye, everybody.
Thank you.